Welcome back to episode 4. In the previous episode, we looked at the basics of finance. In this episode, we continue with finance but look at costing, pricing, gross profit margins, how to do an income statement, net profit, calculate break even, and determine feasibility. We will use an example of a fictitious business called ABC Clothing Manufacturers. This business sews and sells ladies' dresses. So, here we have the data sheet. Now, in the data sheet, you input information like the selling price of the dress. Let's say that the dress sells at 300 Rand, right? Now we want to determine the cost price. The cost price of the dress would involve the material used, which let's say hypothetically cost 45 Rand a meter, and we use 2 meters. So that would be 90 Rand. Other things that may be used on the dresses could be zippers, buttons. So this is just general hobby, and let's say that costs 10 Rand. So the total dress cost 100 Rand to make. Then you see the spreadsheet calculates the gross profit for the dress, which is 300 Rand minus 100 Rand, which is 200 Rand. And the gross profit margin is 67%. That normally is a very good gross profit margin. I normally recommend a gross profit margin of above 60% for the business to be feasible. One of the ways to do an income statement is to go back in the year and see how many dresses did we sell each month. So let's just say in March we sold 60 dresses. In April we sold 50 dresses. In May we sold 50 dresses. In June maybe 40 dresses. What the spreadsheet does is take the number of dresses sold 50, it multiplies it by 300 Rand to give you 18,000 Rand. That's your revenue for the month of March. Now to calculate the cost of sales, it would take the number of dresses, which is 60, multiply it by 100 and give you 6,000 Rand, as you can see here. So that's your cost of sales. So what the spreadsheet does is it takes these values and it populates it into the income statement. So you can see, based on the number of dresses I added, for March the sales is 18,000, April 15,000, May 15,000, June 12,000. Similarly, the mentee can go back and fill in the number for the rest of the months. It calculates your cost of sales and it calculates your gross profit. So here you can see the gross profit is 12,000 Rand for March. I've added a section here on discounts because sometimes mentees may give discounts to people based on the number of dresses sold. So maybe, you get a 20 Rand discount. So that it's important to put those figures in here so that it is shown in your gross profit. Then we have the expenses. Now the expenses could vary. It could be commission. So you could have people selling dresses for you and you give them maybe a 10% commission on the sales. There is a commission tab here where you can go and fill in all the commissions for the month. So maybe you paid person X a commission of 500 Rand, right? So then it's carried over here as a commission. Then we have travel. Maybe in March you traveled to a few places to go and buy raw materials. Maybe you visited some customers. So here you could do the travel log 2 ways. You can either just put in how much you actually spent in petrol, or you can calculate your kilometers and multiply it by the AA rate. So just say your travel was 1,000 Rand for March. So you see you've got another expense here. Then your salaries. Let's just say you're employing 2 other people and your salaries for the month is 20,000 Rand. Now you can immediately see your net profit is negative. So maybe you're employing one other person with yourself and your salary is a bit lower, maybe let's make it 9,000 Rand. Right? Telecoms, that would be your cell phone, your data, Wi-Fi, subscriptions if you have any subscriptions, rent, let's say this business works from home so they don't pay rent. Bank charges maybe about 150 Rand. Administration, no. Marketing, no marketing. Electricity, that maybe 500 Rand. Right? So you can see once you put in your total expenses, you calculate your net profit. That's your gross profit minus your total expenses gives you your net profit. So your net profit is really low considering that your gross profit margin is 66%. Your net profit margin is only 3.8%. Right. So from here, we need to decide what does the business need to do. The business here is barely breaking even, right? So the business wants to do better. So what could we do to improve this business? As you can see, the business is barely breaking even. So things that you could do to improve this business is to increase the selling prices of the dress. So maybe the dress is being sold too cheaply. Maybe the dress needs to be sold for 350 Rand. Then if you look at your income statement, you see there's a bit of a profit there. The profit margin is now 18%. I normally recommend a net profit margin of above 20%. There's other ways that you can also improve the business, and that's trying to reduce the cost price. So you could go look for material that's cheaper, but you don't want it to affect the quality. So buying in bulk is one way to reduce the cost price, right? If you want to look at the business in its optimum state, right? So if you look at the point of where you actually want the business to run, right? And we try and calculate that break even and see how many dresses needs to be made and if it's possible to make that amount. If you go to the hypothetical state, let's say you're going to pay a commission of 1,000 Rand, you're going to maybe travel for 3,000 Rand. Your salaries, you want to employ more people so you can make more dresses. So your salary is going up to 20,000 Rand. Your telecommunications, 300. Subscriptions maybe to magazines, 200. Your rent, you want to now work you don't want to work from your garage anymore. You want to work in a proper facility. So maybe your rent will be 3,500. Your bank charges are bound to go up. Administration, you may need some administration assistance. You want to do some marketing. And of course, you're going to pay electricity. So in the case where your total expenses are 31,400, your break even is calculated as your expenses divided by the selling price minus the cost price, which is the gross profit. So it's basically the expenses divided by 250 Rand. That gives you this break even of 125 dresses. So if you want your business to be operating in this state, where you have more people, you are paying a rent, your expenses are slightly higher, you need to almost double on what your current sales is. And remember, it's easy to double your sales, but you also need to double the market as well. So you'll need to actively market to get more people to buy your product. And then in terms of feasibility looks at the break even being the worst case scenario. And then your average case scenario is where your break even is 150 dresses, right? That's 20%. That's the norm for net profit. And then your best would be 30%. So if you sell 163 dresses, then your net profit's going to be around 30%. So if we put this value here, the 150 in sales, so it's 150 dresses times 350 Rand, and then it's 150 dresses times the 100 Rand, which is the cost of sales. Here you see your net profit is now 6,100 Rand. your net profit margin is around 12%. Now, in order for the business to be feasible, your net profit should be over 20%. So let's just check the best case scenario of making 163 dresses and where that leaves the net profit. So then I change this 150 to 163. And there you have a net profit margin of 16%, which is closer to the 20%. You could always say, you want your best case scenario to be maybe 40%, and then play with these numbers to see where it gets you. Now, in order to make 163 dresses, we need to see if that is actually feasible in terms of what the business currently has. If you're working from a garage and you have 2 people, and let's just say you're making 1 dress a day, right? So you've got yourself and you've got 2 other people. So you're basically making 3 dresses a day for 5 days a week and 4 weeks in a month. So your maximum capacity is only 60 dresses. Now, if you want to make 160 dresses, how many people do you need, right? Maybe you need better equipment so each person can now sew 2 or 3 dresses, right? That's where feasibility comes in. We now see, is this business really feasible at the rate that it's operating at? Right now, you can see, if you look at the March, right, they are barely breaking even, right? Okay, we've changed the prices of the dresses, so now the net profit is around 18%. So with the previous prices of the dress before we changed it, the business was barely breaking even. Your net profit was only 700 Rand. So the break even was 56, say 57 dresses, and the business was making 60 dresses. So the business was barely breaking even. And nobody wants to run a business that's barely breaking even. You want to make a profit, right? So this business has potential to grow and expand. So when we talk about feasibility, we see if the business can reach its break-even point, which would be the worst case scenario, right? And here we see the business is basically reaching its breaking point, and it's at its almost worst case scenario. So this business needs additional resources like space, because maybe 4 people or 5 people cannot fit in the space. So they need to move to a larger space. They need more people, so maybe 2 more employees. They would need the equipment maybe they're using domestic sewing machines. Maybe now they would need industrial sewing machines. Maybe they need marketing tools, because it's easy to say you're going to make 160 dresses, but can you sell the 160 dresses? So you need marketing in order to reach a bigger customer base, right? So in order to do all of this, you will need loan or grant funding. There are many institutions out there that can assist SMMEs with funding. But in order to apply for the funding, you would need the income projections to show how the business will grow after the funding is obtained and the resources acquired. So what we would do is we would complete the income statement for this year and maybe for the previous year if the business was operating. And then in the next episode, I will show you how to do income projections, the 5-year income projections, where we take the current income statement and we do the projection for the next 5 years. Thank you so much for watching. Please like, comment, and share within your network, and subscribe if you haven't already. Thank you.